I want to thank Paul and Nancy and Rob for opening for me. Just kidding. No, I mean, just amazing. Incredible vision, incredible optimism, incredible insights already. So I'm just going to do my part. I'll try to keep this to 20 minutes. I got my stopwatch on here. Paris. And so this whole theme, I was supposed to talk at the end of the last session, but we did the break. The whole theme here is about Paris, the significance of Paris, and implementing Paris going forward. And it's interesting because I did my slides without referring or conferring with anybody else. And greatest economic opportunity of the 21st century, I think that's, thankfully, after the first three speakers, I think that's in line with what we're hearing. There's so much opportunity inherent in fundamentally transforming our systems to be in harmony with the environment, that it is a great economic opportunity. And that's just I love that picture. I love Paris. Paris means so much for so many reasons. Okay, I'm going to quickly go through, this is a lawyer now. You had a visionary and real people doing real things and making real change. Now you're going to get a blood-sucking parasite talking about the law. So, unfortunately, it can't all be as good as that. But hopefully you'll learn a couple things about the Paris Agreement at a granular level. But I do want to jump, if I can, I'll whip through that stuff. And when I get to an example, and as a lawyer, most of the time, everything we do is privileged. It's confidential. We can't share what we're doing with other folks when we're doing transactions and so forth. I have a real unique opportunity now to talk about one that I'm working on with two clients, which we'll get to. And the reason I can talk about it is because it is intended to be a public good project funded by the Rockefeller Foundation. And so I'm very excited to talk about that. So COP21, Conference of the Parties, that's the Paris meeting. The thing about Paris that was really interesting, among others, was it was the largest gathering of heads of state at any one time in the history of humanity. The opening of Paris brought over 150 heads of state, right? So 100 heads of state. So if you think about signals and where how markets respond and what signals need to be sent, the role of government and the private sector and civil society working together to solve these challenges, Paris really was a monumental culmination of things. And I think that the governments learned a lot from the experience in Copenhagen. In 2009, all the heads of states came, not as many, but they came at the end. And the dynamic shifted in Copenhagen in such a way that the people that were negotiating didn't feel that they were empowered, or they kept waiting and they kicked it to the next level and the next level until the heads of state showed up. And then you saw that famous picture of them all sitting around, the G8 sitting around negotiating text. That's not the highest and best use probably of the top 8 or 10 leaders of the world. So they sent the political signal at the beginning, empowering everybody and basically mandating them to get it done. You have 2 weeks in these meetings to get all this stuff done. Really fundamental. Another role was private sector, very huge. Here's the moment of truth. There's Amy, there's our friend Christiana, and Minister Fabius banging the gavel. I mean, just a huge diplomatic effort by the French. And sadly, they lost 1-0 in the Euro Cup today, but nonetheless, a wonderful, wonderful event. Christiana is now, as Amy said earlier, running for UN Secretary General. Did I just blow it for some people? I'm kidding. I just made that up. I didn't look on ESPN.com. Completely made that up. I could be either way, have no idea. I just made that up. Forget I said that. That's Christiana. I'm going to move on now. Okay. Okay, here's the substance. Sorry. So the one thing to think about is the paradigm has been shifted now, and it's a recognition. The Kyoto Protocol set sort of a top-down framework, allocated allowances and units and commitments at the top down, and every country was kind of, the developed countries had targets, the developing countries didn't have any targets, and there was, it worked for its time, but it was clear that in order to get every country to the table, and really capture the emissions that are necessary. Because, over the course of the last decade and 15 years, China has emerged as the world's largest emitter. At the time of the Kyoto Protocol, it wasn't. So its responsibility is different than it was back then. So it's moved from a top-down regime to a bottom-up structure, okay? But there's still a role for the UN as a whole. Now, when I say bottom-up, I mean every country comes to the dance with its own self-determined contribution. That's the secret sauce of this. So anyway, really fundamentally important, I think, is that the stringency of the target. And I know we heard Paul say, that 2 degrees is not a goal or 450 ppm is not a goal. That's true. But it is a measurement point. It is a data point that is important to track. And so the conversation has always been around, let's try to avoid increases above 2 degrees C. And let's all say here, let's try to do better than that. But as an international regime, that's been the language. In Paris, the language was changed. And this is important, well below 2 degrees C with efforts to get to 1.5. So the whole conversation about what's possible at the international level is now moving. The other thing that's interesting is that there's a transparency mechanism and a review process by which countries are supposed to increase their ambition every 5 years. They track it, they report it, and they increase it. So we all know that what came out of Paris and the level of the commitments, if you look at them today, they don't get us where we need to be. But this is an enduring agreement. That's the other part that's really important. It's an enduring agreement that will survive over time and be fitted for purpose over time. Okay? And then let's talk about INDCs in a minute. But net zero emissions, another really important point. And this goes to this issue of drawdown as well. Because in order to have net zero emissions, you either have to have 100% of the global economy emitting zero, or if you have emissions, you have to be offsetting them to net zero. And that requires sequestration. So terrestrial sequestration of the kind of stuff that Paul Hawkins' great keynote presentation described, that's contemplated in the Paris Agreement. There's a recognition that we need to focus on forests and terrestrial sinks and the like, agriculture and so forth. So there's a very interesting opportunity there. Okay, this is an interesting feature, and for a lawyer that's sort of trading in, or does a lot of the carbon finance and works in these markets, there's a section in the Paris Agreement that actually expressly contemplates that countries are going to work in a market capacity. They're going to have internationally transferred mitigation outcomes, or ITMOs. It's basically markets without using the term markets, okay? And fundamentally important part of this is that there's a recognition expressly that there shall be no double counting. Now, that's really important, because when you have 195 countries all having their own design, bringing it to the table, and then agreeing bilaterally, multilaterally, et cetera, on sharing of burdens and maybe transferring some of their measured, internationally transferred mitigation outcomes to one country or the other, it's really clear that we need no double counting rules, and we need clear transparency and accounting rules to go along with that to make sure there's integrity in the system. And those rules need to be developed. So there's a lot of work left to be done to implement. Okay? But the meat of Paris is all about INDCs, NDCs, intended nationally determined contributions, which will convert to nationally determined contributions once it goes into force. Okay? And I'm only going to pick on a couple here. There's a whole database full of all of them. But just thinking about China, the presidents of China and the US met in advance. They bilaterally kind of worked it out, and they showed the world what their commitments were going to be before we even got to Paris. Hugely significant for momentum. And it also took, usually in these negotiations, it's basically the US and China and the EU. They take all the air. All the time, all the energy is about what are they going to agree? How much time are they going to spend to do that? And then you're left with a little bit of time on the margins to get all the rest of it done. This was done before we even showed up. So very significant for purposes of progress. And these are very significant commitments. Now they're different. They're not absolute targets, but they're very significant. And I don't know how, it doesn't seem that easy to read, but you're talking about, this is a per unit of production target, an intensity target, but 60 to 65% from 2005 levels. okay, by 2030. Increasing share of renewables, increasing forest carbon stocks. That's really important. They're going to do a massive reforestation effort. Now let's hope they do it with, biological diversity and habitat complexity and the kinds of things that we would like to see in mind, and not just eucalyptus. But there's opportunity to inform and over time, help that go the right direction. But kind of the theme here that I wanted to suggest is that every one of these challenges, every one of these commitments, every one of these obligations to solve our existential crisis is an opportunity. It's an investment opportunity. And I, not having had the benefit of Nancy's presentation and Paul's presentation and Rob's presentation, I don't even have to get into that. It's pretty much self-evident at this point, which is great. U.S., interesting about the U.S., 26 to 28% absolute reductions from 2005 levels by 2025, okay? And they took a range because there was some uncertainty in what they believed they could do. What's interesting about this, though, is that it is based solely on existing legislative authority, so no new laws, okay, and executive powers. And I couldn't help it. I had to throw that last little point in there. That's the good news for Congress. They can keep going. You can still say no, and we're still going to get this. So, but hopefully we can turn Congress around too, with any luck. All right. Climate finance challenge. Nancy had something in there that was about $1 billion or so that was needed in clean energy. This is just a chart that says, here are the costs. What is one person's cost is another person's investment opportunity, right? But if you look at what the public commitments are on the far right, Copenhagen and the Fast Start, that's $100 billion that's been pledged annually starting in 2020 forward. And there's some data points on some of the costs of some of these single events that have occurred. But what I see here in this chart basically is that's the private sector. So the notion that the private sector is somehow not the central driving force behind achieving our objectives, just as Paul says, just do the math. We have to have that investment. That investment's going to come from governments, hugely important catalytic partnerships that can help mitigate some early stage risks around different things, country risks, technology risks, etc. But at the end of the day, we're really talking about the next investment opportunity for the private sector. Okay, and the private sector is engaging, and this text is like virtually unreadable. But the point of it is there's a lot of commitments. There's been convenings around the private sector, and the Paris, the French diplomatic effort leading up to Paris was magnificent with the private sector as well. Hold on a second. Yeah, some more commitments, and those in the back, if you could just read it for everybody, that'd be great. Is that Aramaic? What is that? It's not even English. That's Sanskrit. We're going back to first principles. These are just major financial institutions, pension funds, all committing, hundreds and hundreds of billions of dollars on the table now, already committed. And why are they doing this? Not because they've all sort of read Paul's book and, changed their hearts, although many of them probably have, because that's where the money is. That's where the future investment opportunities are. So it's just a really positive opportunity signal I wanted to say. Renewable gas, renewables going up in non-OECD countries. That's key. Green bonds, their issuance is on the rise. There's a lot of work that's necessary in green bonds to really make sure there's rigor and understanding around green bonds. And so it's not just you're selling something and saying it's green and not having a performance metric around the greenness of the bond. But there is efforts underway to do that, and those are important. But again, this is a mobilizing capital in big ways. And so my whole point is the future's now. This is the transition, huge opportunities, and for the investment community and for the folks worrying about what does Paris mean. NDCs, these nationally determined contributions, when you start to dig into them and you look at them, with few exceptions, they are green growth economic plans. They are strategies the country has developed to actually improve the livelihoods of its people, the conditions on the ground, increase its infrastructure, all with a lens towards reducing greenhouse gas emissions, solving the climate challenge. And so to me, that's like the bright spot of the whole Paris outcome, is that every country now owns a piece of it. They own it. They've put it in their own language. They've thought about it for themselves, and now they have their own opportunities to implement. Challenging opportunities, challenging to do it, but they're on the path, and we're working towards that, which is exciting. Okay, so let's see what I got here. I got 5 minutes. Okay, 5 minutes. RED Acceleration Fund. RED stands for Reduced Emissions from Deforestation and Forest Degradation. Tropical forest preservation, basically. If tropical forests were a country, they would be the third largest emitter in the world next to China and the US. Okay, that's just to put that into perspective. Every minute, 50 football fields worth of forests are destroyed. Every single minute. So while I've been talking, that's 750 or more. Or well, that's more than that. 10 minutes times 5, 5,000. So it's brutal. Okay, my math is terrible. I'm not doing it right. Anyway, okay, so here's the deal. So consistent with what Paul was saying, you guys can't see this, but gigaton opportunities of reduction. Obviously, you've got China, you've got the US, but when you boil it down, there wasn't a lot more other than terrestrial stuff. Agriculture, forest, and Indonesian forest. They represent really profound opportunities to reduce emissions. Now, obviously, this chart doesn't have the benefit of Paul's analysis and the drawdown work, but I think it's directionally consistent with what they're saying. There's a lot of opportunity in land use. And so that was the goal. And the clients that are involved in this are Encourage Capital, which is an impact investing firm, and Environmental Defense Fund. They've come together and they proposed a fund that would invest in emission reductions now, okay, as an early pre-compliance opportunity to bring private sector capital towards forest preservation. There's been some investment in sustainable agriculture, fantastic, but there really hasn't been scaled private sector investment in tropical forest preservation for the ecosystem services it provides. And that picture with the cellular, showing the opening and the closing. If a tree was a human invention, it would be the most hyped, invention out there. The buzz would be amazing. This thing takes CO2 out of the air, all right, and produces oxygen. I mean, it's a tree. So it's really profound, but we don't value it. Our economic system hasn't valued that service to date. And so what we're trying to figure out is how can we do that? And there's some early signals with California and the aviation industry and signals from the UNFCCC, this Paris Agreement, that say there might be a market for this, a compliance, a legal obligation that can allow for these things to have value in a market, so that investors can go in and put an investment on the ground that preserves forest, and that value can be captured in an economic system. There's signals, but it's uncertain. And a lot of those things, even if they come to be, wouldn't start until 2020. So we have this 5-year period, 4 or 5 year period of uncertainty, and again, 50 football fields a minute. So we don't have the luxury of waiting 5 years to see what happens while the rest, while literally the forests are on fire. So the idea is, and I know this is a lot to get through in 32 seconds, but the idea is, and I'm going to walk over here. We've been talking to very large corporates, okay, in the aviation sector and in the energy sector, who have an interest in buying these things, but can't do it yet because it's too risky, all right? It's too speculative. This fund wants to go out and invest today, starting next year, in credits to keep the lifeline alive, to keep these projects that are sort of on life support, keep them going, get some cash flowing, send a signal to the market, to policymakers as well that are deciding on their policies. Can the private sector really partner with the public sector to really get the money to flow? And so we want to do a test case and set up a fund. It will be matched, basically a contract for offtake here, equity investment here, you pool that, you buy the credits. If in 2020 there are compliance regimes, the price goes up, there's accretion in value, everybody gets a share, and we give back. We share back with the projects and the jurisdictions, okay? But the big question is, and if everybody knew that was going to happen, we wouldn't it'd be happening. But we don't know that's going to happen. It might not happen. So there's risk. So this side here is really what we're working on, is getting a purchase guarantee backstop. It's basically saying a buyer of last resort. If in 2020 nothing happens, we didn't achieve it, there's a purchase guarantee backstop. Call it a put. So we're able to sell. The fund is able to sell it at a price. The price is not going to be, by the way, the same as what these guys are investing. This is just a partial risk mitigator. So they're going to take some risk, but they're going to get their downside mitigated to a degree, which, by the way, allows them every public dollar that comes into this. So we're looking at philanthropy in donor countries, okay? Every public dollar that comes in leverages 1.5 to 2, maybe $3 of private sector capital. And you hear governments all the time talk about, we want to take public money and leverage private sector capital. This is the vehicle that does that. So real quickly, and then I know I'm done. So this is a blowout of that backstop. What we think could be really interesting is getting kind of 3 bites at the apple, or triple benefit. So you take the money, you put it in a pool, but you don't actually need it until after 2020, right? So you could invest it in some sort of a principal protected bond, forest bond maybe, that might be emerging soon. So you can take the money that's put in there, invest it in that, get your money back. That enables leverage over here for more conservation. You got conservation here. And then if, good news, you don't need this, we don't want to use this, because if this comes into effect, right, that means this system didn't work in 2020. So hopefully this will be a source of money that doesn't actually need to be used, in which case it can be donated for conservation purposes, and CI has a fund that it manages. And so it can be a straight conservation grant at the end of the day. So this is sort of what we're working on now. We're going to unveil it in the Rockefeller Center in Italy, in Bellagio, in October. And we're in deep conversations, and we're getting to term sheet stage with all of the relevant participants in here. But as you can see, in order to get the capital to flow, you have to sort out, what does this contract look like? What does this contract look like? How do you buy carbon credits from a jurisdiction, from a sovereign? What is that all about? How do we structure this all of these little elements to it? And they're all contractual based. And so what's exciting about this is that we're gonna do all that. We're gonna put detailed term sheets together, and then we're just gonna offer it up unveil it and do some social media stuff around it for the public good. And that's what Rockefeller funded. Once we do that and we conclude that, then we'll pivot and we'll start to have finalized commercial negotiations around the structure and go live with it, hopefully beginning of next year. So that's that. Thank you very much.